Welcome to the Deep Dive. We sift through the noise, pull out the key insights, and give you what you need to know. Today, we're tackling something really interesting. It's where advanced tech meets complex rules, specifically in the insurance world. We're talking regulatory technology or Regtech. Okay, let's unpack this. So our mission today is to explore just how critical Regtech is becoming for insurers, helping them handle all these complex regulations while also pushing forward with digital transformation. It's not just about compliance, it's becoming a real strategic tool. And we're basing this deep dive on some great data from a market forecast report by Cognitive Market Research.
Yeah, exactly. And just to define it quickly in this context, Regtech for insurance is basically smart tech stepping in to handle regulatory hurdles. Think AI, machine learning, tools that automate the really complex, time-consuming compliance stuff. It could be scanning new regulations automatically or spotting potential risks in transactions almost instantly. It's replacing a lot of manual work, making things more efficient, definitely more secure, and cutting down on errors. It's shifting compliance from just a cost to something, well, potentially insightful.
Right, from cost center to strategic asset. Let's get into the numbers then, because they really tell a story about the scale here. Globally, the Regtech insurance market was already pretty substantial back in 2021, valued at $8,407.87 million. But the growth trajectory is what's really eye-opening. By 2025, it's expected to hit $11,538.7 million. And then looking further out to 2033, it's projected to more than double again, reaching a massive $21,731.9 million. That's a compound annual growth rate, a CGR, of 8.235% over that whole period. That's pretty rapid growth.
It really is. And those global figures, they underscore just how necessary this modernization push is for insurers. It's not optional anymore. It's becoming table stakes. Imagine trying to manage, say, data privacy laws across multiple countries manually. It's almost impossible now. Regtech automates that, monitoring the reporting, even predicting potential issues. It lets insurers move faster, innovate with less risk. It's about staying agile when the rules keep changing.
That makes perfect sense. It's a huge challenge otherwise. Okay, so that's the big picture. But where is this investment and growth actually concentrated? Let's break it down by region. This is where it gets really interesting. Let's kick off with North America. A really significant market presence here. Started at $3,077.28 million back in 2021. And the forecast. It's expected to reach $7,540.99 million by 2033. That's a solid CAGR of 7.757%. U.S. is the big player, obviously. It was $2,544.91 million in 2021, heading toward $6,155.71 million by 2033.
Right, the U.S. dominates, but Canada's growth is actually a bit faster, at 8.579% CAGR. And Mexico's showing strong growth, too, around 7.9%. What's driving it there? Well, you've got mature but constantly evolving regulations. Think about things like new data privacy laws, cybersecurity focus. Insurers need tools to handle customer data securely, especially as everything moves online interactions, claims, you name it. Plus, there's just a general push for digital efficiency.
Okay, got it. Let's hop across the pond to Europe. Also a very strong market. It started at $1,872.92 million by 2021, and it's projected to grow to $4,476.78 million by 2033. That's a CAGR of 7.784%, pretty similar to North America, actually. The UK market, for example, is set to nearly triple from its 2021 base.
Yeah, and what's fascinating in Europe is the diversity. Germany is actually leading the pack in terms of growth rate, nearly 8.5% CAGR. Maybe driven by things like GDPR and a strong focus on data protection. But you also see really solid growth in France, Italy, and Spain. Spain's going from about $148 million to over $375 million by 2033. And then you have consistent growth in places like Sweden, Denmark, Switzerland, even Luxembourg. They're all adopting Regtech to meet their specific compliance needs, whether it's anti-money laundering or solvency rules.
A very active region then. Now let's turn to Asia Pacific because the report highlights this as, well, arguably the most dynamic area. The growth rates here are some of the highest globally. Markets expected to surge from $2,110.38 million in 2021 to a huge $6,041.48 million by 2033. That's an impressive 9.171% CAGR overall for the region.
It really is impressive. China's a major force, obviously growing at about 9.4% CAGR, heading towards $1.7 billion by 2033. But India leads in growth rate of phenomenal 9.973% CAGR. It's going from around $323 million to over $1 billion by 2033.
Wow, nearly 10% CAGR for India. That's incredible.
It is. And Singapore is also strong, near 9.5%. So why such rapid growth in APAC? Well, you've got booming economies, a rising middle class demanding new insurance products, often mobile first, plus governments are pushing digital transformation and financial inclusion. Manual compliance just can't keep up with that speed and volume, so Regtech becomes essential.
Okay, that makes sense. Rapid digitalization needs rapid automated compliance. Let's look at South America now. They're also embracing Regtech. The market is projected to rise from 538.104 million in 2021 up to 1,439.09 million by 2033. That's an 8.529% CAGR. And Brazil looks like the regional leader there.
Yes, Brazil is the largest market, forecast to hit about $600 million by 2033. But Argentina's growth is notable too, over 9% CAGR. And you see Colombia, Peru, Chile also adopting these solutions. It reflects that wider digital transformation happening across Latin America. They're often trying to align with international standards, improve financial system efficiency. As things go digital, automated compliance is key.
Right, another region driven by broader digital shifts. What about the Middle East? The report suggests RegTech is becoming crucial there too, particularly with regulatory reforms. The market's growing from $470.841 million in 2021 to $1,242.42 million by 2033, which is an 8.407% CAGR.
Exactly. Saudi Arabia is the biggest contributor, heading towards $332 million. And the UAE has strong growth too, nearly 9% CAGR, reaching over $240 million. A lot of this is tied to government initiatives like Saudi's Vision 2030. They're building up financial hubs, attracting investment, and that requires a more sophisticated, transparent regulatory environment. So RegTech becomes vital for insurers operating or expanding there.
Makes sense. It's part of building that modern financial infrastructure. Okay, finally, let's touch on Africa. The RegTech and insurance market there is projected to grow from $378.354 million in 2021 to $991.194 million by 2033. That's a solid 7.902% CAGR.
Uh-huh. South Africa is definitely the leader, expected to reach almost $389 million. And Nigeria is showing significant growth as well, heading towards $170 million. It reflects that broader pattern, again, digital adoption, financial inclusion efforts, the rise of mobile money. All this increases compliance complexity, from checking customer identities to spotting fraud. So insurers are turning to automated RegTech tools.
It's fascinating to see the global sweep, but also those regional drivers. When you look at all these numbers, this global shift, what really stands out to you?
For me, it's the universality of the trend. It's not just one or two regions. Everywhere, insurers are recognizing that managing regulatory complexity manually is unsustainable. And it's not just about avoiding fines, it's about enabling innovation and building trust in an increasingly digital world. The sheer pace, especially in APAC, is also remarkable.
Yeah, that pace is something else. Okay, so let's try and summarize. What does this all mean for you listening in? The big takeaway seems clear. RegTech in insurance isn't just a niche tech play. It's undergoing rapid, truly global expansion. We're seeing it everywhere. Mature markets like North America and Europe are investing heavily. High-growth areas like Asia-Pacific are absolutely surging. And South America, the Middle East, Africa are all strongly adopting these tools. It's a worldwide phenomenon.
Absolutely. And connecting it to the bigger picture, this points to a fundamental change in how insurance works. RegTech is becoming foundational to modernizing compliance. It lets companies meet rules efficiently, securely. And looking ahead, the potential is huge. Think real-time regulatory updates being integrated automatically, AI spotting complex fraud patterns. It makes the insurance sector not just compliant, but potentially much more efficient, secure, and maybe even proactive. The future here looks very transformative.
Definitely transformative. So, as we wrap up this deep dive, here's something to think about. How might this explosion in RegTech go beyond changing how insurance companies operate behind the scenes? How could it actually impact your own experiences with insurance in the coming years? Could it mean faster claims processing for you, more personalized policies based on better compliant data use, maybe even a whole new level of security for your financial information? Lots to consider. And remember, this analysis was powered by data and projections from cognitive market research.